Hi everyone, welcome back to Idiot Investing. My name is Mike. Today we're going to go through my entire dividend portfolio valued at a little more than $6,000. I'm anxious to get into this thing so you can see what kind of stocks I'm holding, what kind of dividends they're paying out, what my cost basis was. So hang back, let's get this thing going. Thanks for joining. We're going to go through my entire Robinhood portfolio. Right now it's valued at about $6,622. Again, I invest about $50 every single week, or about $200 a month, plus some extra cash that I have lying around. I started this portfolio kind of around the time the pandemic hit, just before I started putting in a little bit extra money. What I was seeing in my returns in my bank account, I was only getting less than 1% return. So I said, hey, let's throw it in the stock market, see what we get. Of course, the coronavirus hit us and, panic set in, but I stuck the course, started incrementally investing money every single week, every single month. And right now, with the year to date, we are set up at plus 14%, almost $832. So incredible returns for just putting your money into high quality dividend stocks. So the first stock we're going to look at is 3M. Right now I hold 0.4 shares of 3M. Of course, I can only really do fractional shares. I'm not a guy that can go buy 10 shares of $100 and something stock. I don't have thousands of dollars on hand all the time. I got my cost basis is set at $69.25 for the 0.4 shares that I have bought, with about a 3.36 dividend yield. So not too bad. I want to own more 3M. I work in a hospital, so every piece of tape that we use, if you've ever had people have IV tape or anything like that, that's all 3M. So it's something that I use. It's something I want to invest in and be a part of. I think it's only going to consistently go up. So I definitely want more 3M. The next stock we're going to take a look at is Duke Energy. Duke's a brand new stock that I bought. I needed to get into the energy sector, and I was debating between Duke or the Southern Company. Being from Alabama, Alabama Power is the Southern Company. So I kind of like to own shares of companies that I use or I work with, that I'm invested in. If I'm putting my money into bills or products, well, I like to be an owner of those products or companies. That way I can hopefully get some return on investment there. So Duke Energy, I got in at a cost of I spent $100. My average cost basis is $91.04 with an average dividend yield of 4.17. Again, I only really have one share of that. I'm hoping to get a lot more, again, kind of increase my diversity into the utilities. So the next stock to look at is PepsiCo. PepsiCo is one I really want to get into. They're an incredibly diverse company. They don't just do the sodas, they do all the snacks, Lay's, chips, all kind of stuff. So they're a lot more diversified than Coca-Cola. I do own some Coca-Cola, which I'll show you later. Right now I've got just 0.71 shares of Pepsi. I bought that with a cost of $101.80. And they give out a dividend yield of about 2.71, so a little bit on the lower end, but I do see a higher growth with a company like this because they are so diversified. You can have revenue from all kinds of different streams. Next on the list is PepsiCo's competitor, which would be CocaCola. Coca-Cola was the first dividend stock that I bought. Once I started learning a little bit more about it, how they pay their investors, you can't go wrong with Coca-Cola. Warren Buffett, is highly invested in them, and I figure you can't really go wrong there. So I've got 5 shares, 5.08 with some dividend reinvestment there of Coca-Cola. So 5 shares of Coca-Cola, I bought it at an average price of $45.09 with a dividend yield of 2.99. That dividend yield was actually a little bit higher when I bought it. But as the price has gone up post-Rona, obviously that dividend yield goes down a little bit. And I definitely like to get a little more Coca-Cola. I don't see a lot of growth with that company as you would maybe at PepsiCo. They trade pretty flat, but the dividend and the dividend yield are consistently going up. It's a dividend king. You can't really go wrong putting your money into Coca-Cola. So the next stock is Johnson & Johnson. I own 1.2 shares of Johnson & Johnson. An incredibly diversified healthcare company. They really have their hands in everything. And I think it's a favorite among most dividend stock investors because you are going to probably get that growth out of it. Right now, I got the average cost at $149.36. This is one of those stocks I don't care about the average cost. I'm probably going to consistently invest into them. I don't really care what the cost is, as long as it's not completely outrageous. The dividend yield right now is at 2.5. Again, this is going to be one of those great growth stocks with a dividend, so you're hoping to just kind of drip that dividend right on back in there and hopefully kind of snowball your Johnson & Johnson stock for the long haul. This is something that I'm never going to sell, and I don't think many others would either. Next stock is Procter Gamble. I own 2.99 shares of Procter Gamble. As we know, we use their products every single day. The average cost is $139.82 with a dividend yield of 2.24. Another one of those stocks, much like Johnson & Johnson, I'm going to consistently put money into it. Is it going to be the fastest grower? No, but it's definitely not going anywhere. And I think the more money you put in, have the dividend kick in, and it'll snowball into a high value stock. The next one is Pfizer. Not much of an introduction needed there. It's obviously the first company that came out with the coronavirus vaccine. I own 10.08 shares. The average cost of those shares was $35.24. I obviously got this well before any kind of vaccine news was coming out. Now, of course, it shot up when the vaccine came out, but it's since been kind of coming down. Within the last month, it's down almost 8%. So kind of hefty. I'm expecting it to go back up. There's a lot of news coming out about more countries buying the vaccine, new loads, and of course other companies are coming out with their vaccine. But Pfizer's one of those. They also have other pharmaceuticals. So I'm okay with Pfizer right now. Hopefully, I'm looking to get to around 100 shares of them. Maybe run some options. It's a lower valued stock per share, so I think it's something that I could afford to invest about $3,000 in, $4,000 in, and be able to run some kind of wheel strategy for the options. And next is Disney. I have 3 shares of Disney. Obviously not really a dividend stock, as right when I bought them, they stopped paying their dividend, which is understandable with the park closings and things of that nature and kind of restructuring their company to go more towards streaming. I bought the 3 shares of Disney all the way down at $113.17 with a total return of $204, and that gives me a total return of about 40%. Doing really well with Disney. I'm not going to sell them just because they suspended their dividend. It's Disney. It's a blue chip stock. It's only probably going to go up, and it's probably only going to do better once they reopen the parks and the revenue goes sky high. I think Disney Plus has been a huge success, so I'm very happy to kind of get into Disney, and hopefully they reinstate that dividend pretty soon. Next is Federal Realty Trust, FRT. I own 6.07 shares. This is a REIT. It's also a dividend king. I jumped into this real estate one. Obviously, with the coronavirus, these prices tanked, and you couldn't get in at a better time. My average cost was $76.82, and I'm up $50 total dollars right now. It's been kind of fluctuating ever since the vaccine news came out, but I'm expecting it to kind of go back to pre-corona levels, which is somewhere around the $120 range. So I could see some really good growth. The next stock is Citigroup. I own 10.09 shares of Citigroup. Again, I got this at just an incredible price and dividend yield. My average cost is $43.90 with a dividend yield of around 3.31, but it was actually well over 4 when I bought it. I know everybody kind of tends to lean more toward JP Morgan Chase with the dividend, but I had such a good deal on the Citigroup that I had to take it, and right now it's paid off really well for me as I've gotten over a 40% return on it. Couldn't be any more happier than that. And we'll see how that stock performs with the new president coming in. My one oil stock that I have is Chevron, CVX. I own 6.61 shares. The average cost on that is $80.07. I'm not a big oil guy, but again, I use Chevron a ton. We have a Chevron plant down here in the South. A lot of people work for Chevron. I think it's one of the safer oil plays. I'm not big on ExxonMobil. I think that at some point they're going to have to get bought out. That's just my take. I don't know if that's actually going to happen. So I'm pretty comfortable investing in Chevron. I'm not going to invest a ton into it, but I do like Chevron's dividend. Right now their dividend yield is over a 6.11. So you can't really get much better than that as far as an oil company that's at least in better shape than ExxonMobil. Another realty stock that I'm sure everybody on YouTube invests into is the monthly dividend stock, Realty. I have 10.15 shares at an average cost of $58.51. Again, this pays every single month. I'll show you the dividends later. I still have like a 6% return on Realty, so I'm pretty happy with that. Of course, this is one of those that I would like to invest more in, get those monthly dividends in, kind of get that snowball rolling a little bit quicker. Next is SPHD. I have 20.2 shares of SPHD. Again, this is an ETF, a low volatility dividend ETF. It pays monthly. So again, kind of in the same vein as the Realty, I would like something that pays me every single month. I'm able to reinvest that, hopefully get that snowball going every single month to try to reinvest into that stock. That way I can kind of increase the amount of shares that I have in a lower time frame, especially since I'm not able to put in thousands, $2,000 a month to buy so many shares of something. I'm really relying on these dividend reinvestment plans to kind of help me increase my position in each of these holdings. And last but not least is ticker symbol T. This is AT&T. This is probably a 50-50 shot. Some people love it, some people hate it. I know there's debt issues. But HBO Max I feel like has done pretty well. Right now I own 30.28 shares. This is one that I'm trying to get to 100 shares. I want to run the real strategy and do some options trading on it. Again, it's at that lower price point where I think I can get to 100 shares fairly quickly. But I would love to be able to run that option wheel, grab a little more passive income, and kind of help me out in building some of my other positions. I bought AT&T when it was at 27.67, which was really low, and I'm pretty confident buying it there. I know I'm not really comfortable buying AT&T over $30. I know they have crazy debt issues, but I think anything under $28, $29, I'm okay with it. It's worth taking that risk to me, especially with a dividend yield of over 7%. You're really going to be able to snowball those shares, grab some more. But I'm a little more positive on AT&T than most folks. I really like what they're doing with HBO Max. I like that they're paying down their debt, but I also know that they're probably going to spend a little bit more money in the 5G race. So it's something to watch out for. It's a little bit more of a risky stock. Verizon's probably a safer bet, but for right now with AT&T and that 7% dividend yield, that's kind of where I want to put my money. Although with that new Wonder Woman movie, I'm going to tell you right now, I almost sold all my stocks. That movie was a piece of garbage. I could probably do a whole video on how bad that movie was, but right now, hold on to AT&T and getting that 7% yield. All right, everyone, that was a look at my dividend stock portfolio. Again, $6,620. Hopefully, we're going to increase that over the coming months. We do have a little stimulus check coming from the government. You know, they're going to take half my income, but they're going to give me $600 back. So we'll see what we can do with that. All right, if you've enjoyed the video to see how dividend reinvesting works, go ahead and like and subscribe. That way we can put out more content. I also have links to Robinhood and M1 Finance. If you haven't signed up, sign up now. We each get free stocks. It kind of helps us take a little step extra on our journey. Thank you for watching. Hope you keep tuning in and have a great and blessed day.